Right, good morning, everybody. My name is Asha Al-Mansouri, and I'm the Executive Director of the Emirates Family Office Association. Today, I'm joined by a host of family office experts, which will discuss with you how families can effectively harness co-investing as a tool to access bigger deals, share risks, and build valuable partnerships. I'd like to hand over to my esteemed panelists just to give a short introduction about themselves. Please limit it to time because I can see the timer here ticking. So in order for us to enjoy this panel, I'll start with Hans and go over to the rest. So just a brief introduction, please.
So Abu Dhabi, the capital of capital, we have seen that everywhere. And Luxembourg, the capital of funds. And it's the leading and oldest Luxembourgish bank, BIL, that I'm representing here today.
Thank you, Hans-Peter. Ekta?
Thank you so much. I'm glad to be here. My name is Ekta Tulani. I lead investments for His Royal Highness Prince Khalid bin Al Walid bin Talal Al Saud. We are a technology portfolio focusing on venture capital. Thank you.
Jaspreet?
Thank you. First of all, a big thank you to Abu Dhabi for organizing this. I'm Jaspreet, Head of Investments for Burkett World Investments. It's a single family office based out of the United States, but I'm based locally here.
Cheeman?
Hi, good morning. My name is Cheeman Kwan. I'm co-founder and group CEO of Raffles Family Office. As a pan-Asia multi-family office based in 6 cities across Asia at the moment. Very happy to be here. Thank you.
Thank you so much. Ekta, I'll start with you, and then we'll include Cheeman in the same question. But to begin with, what are the strategic advantages does co-investing with family offices, and are you seeing an increase in co-investments across the ecosystem?
Thank you for that question. Of course, there are a lot of advantages. One of the best advantage I would say is that you have sort of a ready-made due diligence conducted by the lead investor. And generally, the key purpose of co-investing is that some people who may not want to cut bigger checks may still be able to participate in those deals, have access to really curated deals when they come along with someone who is an expert in that area. So that serves as a sort of expertise on the table. And I would say at KBW, 50% of the portfolio, or probably more than 50% of our portfolio, is co-investments. And we heavily, not only just rely, but I would say collaborate a lot with our strategic partners for the kind of deals that we like. It gives us an opportunity to cherry pick on the sectors that we prefer or which align more with our long-term strategic goals. Thank you.
Thank you. Cheeman, over to you as well. Answering the same question, but actually touching upon co-investing is often used as a tool by families to manage risks within your portfolio. Can you explain why this or how is it used effectively?
Sure. I think I can speak on behalf of Asian family offices. I think the newer generations tend to pick up information and look at the financial industry very different way. I mean, one of the very fundamental way is differentiation between buy side and sell side, which means that co-investments is a combination of 2 buy sides, or even more buy sides together, right? So I think this alignment of interest is really a very powerful strategy, because can you imagine somebody coming out to you and say, you know what, I think this is a good company, we should invest in together, and my money is in, I have skin in the game. So I think that plays a much bigger part. And at the moment, I would say it's not even increased trend, but I think that is going to be a dominant strategy for a lot of family offices having co-investment, which means that they want to listen to buy sides, advice from buy side rather than sell side.
That's very interesting. Takes me back to Jaspreet. If you can tell us what are the biggest challenges faced when co-investing, and is it ensuring the alignments of interests among co-investors?
Of course. So I just want to preface that saying that when we co-invest as a family office, the funding gap is very rarely the motivation. Most times it's about strategic alignment that Ekta talked about and Cheeman talked about as well. So but in terms of challenges, though, it's always about who is the right co-investor. So I'll give an example. Anytime we are like one of the recent investors we made, because we typically do investments in pre-IPO companies. So picking the investors there, the co-investors with us, is extremely strategic and important because we cannot afford to make a mistake, and it's very rarely financially driven. It cannot be, actually. So a company that we invested in recently is an AGI company called Blaze, based out of California. It's about to go public on NASDAQ within a week now, actually. And of course, we're very excited about it. But when we went to look for co-investors for that, like I said earlier, it wasn't to fill the funding gap, even though we did raise 150 million for the pre-IPO pipe. It was about who can open doors for them, who can be strategic, who can help in the long-term growth of that company, and who aligns very well with our portfolio company, that target company, and also with us, even in terms of culture, because you want to have a long-term view, as if any of those things are missing, it can become a very big problem. So as a result, Blaze is very well positioned because of that investment in terms of market access and expertise that our co-investors brought.
And Jaspreet, what are the sectors that are most exciting to you right now when it comes to co-investing opportunities?
Yeah, so in terms of sectors, infrastructure is most exciting to us and even to most family offices we are talking about. And when I say infrastructure, it's particularly AI infrastructure. With the growth in AI that we're seeing, you do need the back-end infrastructure, and I'm talking data centers. And when you talk infrastructure, it has a lot of components. There's land, there's power, there's connectivity, there's the actual physical buildings, there's the racks, there's the GPUs, there's a lot of things. So how do you focus on that's where the co-investment piece becomes very important. And I think it's probably the ideal approach for co-investing, because here we have a shared pool of resources and expertise in order to take these investments forward.
Thank you, Jaspreet. Ekta, I come back to you on, and if you can elaborate a bit more on what are the biggest challenges faced when co-investing and ensuring the alignment, and can you please give and explain to us how can this be achieved from your perspective?
That's the most relevant question when it comes to co-investing. I think when we look at co-investment opportunities, there's one thing that we definitely want to be sure about is who are we partnering with, right? There has to be strategic alignment, and how do we check whether there is strategic alignment other than, yes, our risk, return, and horizon timeline is same. Those are the basics, but other than that, who is bringing in that opportunity? Is it the principal bringing in the opportunity, or is there some advisor / middleman? I'm sorry if somebody is offended with that. But we do like to see that somebody who is proposing the opportunity, do they have their own skin in the game, right? And sometimes we get opportunities where even it is family offices, they say, we invested in this company early on at an early stage, and now this company has grown to this level, you should invest. My question would be, are you investing again? Because do you see upside from here, or is it just multiplying on your AUM right now? So those are the kind of questions we need to ask to really assess. One, at what timeline we are getting in with the ones who are already in. So that's a good way to gauge the alignment. We do want to collaborate on a long-term basis, also, which is sort of in some way either aligned with our businesses, investment goals, also with the people, because we tend to continue to invest again and again with the kind of people that we've already built relationships with. So this is the kind of alignment we would like to have.
Thank you so much, Ekta. You do touch upon a very important point, which is the human element. And I mean, a lot of the investments that happen or people that co-invest actually look into this element. It's not always about, right, the numbers, they are important, but there is that very special element when it comes to the human interaction relationship, which I really think you would all on this panel really agree to. Let me hand over a bit to Cheeman and speak about the co-investment deals. They often result in complex negotiations between multiple parties. Do you have any advice when it comes to managing these negotiations or structuring co-investing deals?
Thank you. I think, it's funny that you just mentioned the human factor, the human element of it. It's actually Very, 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 very important. And it is something that has always been understated in a lot of what we do. I can give you a bit of context. Raffles Family Office, we are Pan-Asia. We manage about slightly more than 200 families' money across Asia. About 40% of our clients actually are single-family office. And then the next question is, why do single-family office still use a multi-family office? First of all, Raffles, we have 8 pillars, right? So it's almost like a supermarket. The single family office, they might be very strong in certain pillars, and they say, you know what? I don't have this 1 or 2 or 3 pillars, so I want to come in Raffles and pick it up. And one of them is private equity. So to answer your question, all of these 70 to 80 single family offices that uses our platform, and one of the key things that we do sometimes is to connect the dot between them. Right? So let's say there is a target company there's alignment between 2 or 3 or 4 families. And when they come together, generally, I would say that from my experience, more than 50% of the time actually is a no-go. And that is down to the human element, the negotiation, who's taking charge of it. So ultimately, one of the first advice that we give to the family, not just between families, sometimes even within one family, because when you get to 3rd generation, the stakeholders just exponentially increase. First generation, you generally have 2 or 4 or 5 stakeholders. By the time you get to the 3rd generation, there's probably like 25, right? But how do you get them to work together? I think the first thing is to really, first of all, to get somebody independent, kind of from outside the family, but at the same time, professional. License maybe. I think that is important. And then after that, instead of agreeing everything on a handshake, put everything in black and white in a legal structure. And in Hong Kong and Singapore, generally is very popular to have a local fund structure where you put everything into a PPM where it's legally documented and is all being spelled out very legally by lawyers and legal professionals. And once you sign on it, there's no way back to say that I didn't agree or I didn't understand this term. So I think that is important. You need to have an independent third party professional, most preferred license, to take charge of the whole, I would say, execution part. Because without that, even the alignment of interest, sometimes more than 50% of the time, it doesn't happen.
Thank you so much, Yuman. That was really very insightful, and especially that you bring the Asian element into the market. Hans-Peter, apologies, left you to the end, but we're going to have a very interesting session with you and Jasper in conjunction. So it would be great if you can both discuss examples of the co-investment deals that you have been involved in recently. And if you can please explain these details and share them with our audience, why are they really successful? I'll start with you, Hans, and then I'll hand over to Jasper.
Thank you. And building on what Shiman said, I think that human important and that family engagement is so important. And the example I want to share with you, that as a bank, we advise and we also finance family offices when it comes to co-investments. And one example coming to mind is a traditional European entrepreneur whose holding company over time evolved into a family office as excess capital and liquidity became available in the holding, and gradually the holding transformed into a single family office which was established in Luxembourg. Initially investing in public assets, later in private markets, and progressively also open to co-investments and directs. Now, client came to us because of the 2nd generation, actually being interested in a very early stage venture opportunity to make a meaningful investment in an online sports-related global platform, which could actually has the potential to become a next unicorn. Now, client was looking for financing to help him to finance that investment in that early stage investment. Now, normally, as bankers, you wouldn't invest a very early stage investment, but because of the potential, the ticket size was actually very, very meaningful. So we helped the family to make it happen, even though the family's strategy was to focus on more mature investments and as co-investments in general. We actually put in place an NAV financing on the diversified portfolio to help to make that venture investment possible. Now, last example is a co-investment from another perspective, because we often talk about equity, but here I'm talking about debt. And this involves a Swiss-based founder investing in Poland in a very large solar project, where, to make a long story short, we in the end advised him to raise green bonds on the Luxembourg Stock Exchange to actually offer short-term debt to investors as co-investors with the founders, through a private placement bond instrument with a very high coupon. So there are different angles from which co-investments could be approached, and that's what I try to share.
Thank you so much, Hans. Jaspreet, I'd like to hear it from you as well.
Sure, absolutely. So as a family office, we have three verticals: real estate, mining, and technology. And within technology, AI is a very big focus for us. And it became a focus not because AI is the hottest thing and everyone's looking for the growth, but we do see AI very strategically, even as a family, of what it can do to the world. So that angle of impact is very important to us, because AI in the hands of the wrong people can be extremely dangerous. So which brings me to the co-investment piece, that when we go look for co-investors, we have to make sure that it's not just financially aligned, which I'm probably repeating myself, but it's the non-financial part is even more important to us, is that what kind of investments are you making, where is your mindset at, and where are you looking to take this investment? And then as part of that, of course, I'll talk about the same example I gave earlier, Blaze, that we're taking public. It's Edge AI, which is a very useful technology, but at the same time can be very dangerous in the hands of wrong people. So when we looked for co-investors, of course, they made the financial investment. But for them, once we were aligned with them in terms of culture and strategy, the next thing was, how do these co-investors fit in the overall picture beyond the financial investment? And we very carefully chose investors who could help us with market access and also with operational abilities. And the investors we chose have very deep networks in the GCC. And that was important to us as a family, because we know the GCC, especially UAE, has made such a strong push towards AI and innovation. So we wanted to make sure we do something here. And the second piece, of course, was who has the operational expertise to bring in it. And especially because this company is going public, which is most of our investments, is going to be in the news, in the light. So even more important that you're aligned with the right investors.
Thank you, Jaspreet. Hans-Peter, what are the major challenges faced by families who co-invest, and how can those be mitigated? I think it's a question that is very interesting to me, and I think to many people in the audience.
If I reflect on what I see with the clients that we are involved in, I would say the things that go well, but also the things that have gone less well. I would say the first thing is to get a clear strategy to avoid that your portfolio is all over the place. I mean, you need skills in the sectors that you're focusing on and knowledge about the fundamental trends underpinning those and so on. I think second, establish a comprehensive framework with your GPs so that you truly have full access to their deal flow and not only to the ones that they cherry pick to present to you. And maybe finally, think also of the after effects or the follow-on activities from your investment. So you may see top-ups. You may have to deal with exits. You may have to deal, hopefully you have to deal with exits, and you may have to deal with restructuring. So prepare your resources and your skills, and potentially prepare your team for direct investment capabilities going forward.
Thank you so much, Hans. I think you left the audience with three very key pillars, I can say, that they can think of if they decide to do anything related to co-investment. We'll end this panel with Jaspreet. Can you please share your insight on the future evolution of global co-investment landscape, and what is the role of family offices set to play within this?
That's a great question. So the co-investment landscape is transforming very, very fast, and family offices are actually right at the center of it. So when we start looking at, as a US family office, we're always looking to align with other family offices globally, obviously to co-invest, but also for access to interesting and high return opportunities. But when we're looking at the industry right now, and I talked of infrastructure earlier, that is especially AI infrastructure, which is really top of mind for a lot of people and a lot of investors that we're talking to. It's and as it gets bigger and more sophisticated, I believe family offices are placed very well in that space, especially because infrastructure investments are very large and very complex. So the more expertise and more varied experience you can bring in, the more interesting it gets. And also, it helps with the growth of the portfolio companies. And family offices have the ability, the agility to move, to deploy patient capital and be at the center and help actually build an ecosystem around that. In terms of where the industry is going on 3 trends, I would say probably 3 that we look at all the time. One is obviously global collaboration. The co-investment deals across the world with other family offices will continue to happen. The other component we're looking at is sustainability and scarcity. So assets like renewable energy and land, for example, for AI infrastructure, these are finite assets. So that's where family offices can again play a very big role by co-investing, because it's a long, patient game with very, very high returns. And AI is on a growth path, so that's not actually changing. And the last I would say is impact through technology. And again, technology is on our lives. AI is probably one of the biggest things out there right now. And the impact it can make where family offices can, again, really get together, support an ecosystem, and support the direction of where this technology is going and getting deployed. So in terms of trends of where this market is going, if you take a macro look at everything that's happening and the role family offices can play, instead of just being capital providers, we actually have an opportunity to become the structural architects of the future global economy.
Thank you so much, Jaspreet. Thank you so much to your panelists, and thank you so much to the audience for attending. Can you please give them a round of applause after this?